Hello and welcome to another Major Market Movements End of the Week Market Review for July 10th, 2015 in Quad G. In this video, we're covering the FX markets, equity markets, the 10-year note, and the natural gas market as well. And starting off with the US dollar, today's sell down is showing the weakness of this recent advance. Making it stand out, and it makes me think that the previous trendline break to the upside may have been a false breakout, and we could be turning around here for another dive to the downside. However, I do think that the downside could be limited as well. This could be some kind of a elongated triangle pattern. It's still too early to know for sure, but this could be an A, a B, a C, maybe a D down here, and then an E, and then another move to the downside. I see that as a possibility. But if it's if this has just been a contracted flat correction as part of a larger impulsive drive to the downside, a break of this trend line down here could allow for a free fall in price. So I think it's, even though we may only come down here maybe a couple hundred ticks, we may, it might be worthwhile getting in, and so that we're prepped and ready for that potential of a break of that trend line and collapse in the price. So I'll be setting up some trades here in the next report to take advantage of that move to the downside. The QG3 for the US dollar still technically in a bullish alignment, though it's contracted some. Again, today we're closing underneath the 3 EMA, letting us know we're in a corrective pattern. And you can see that the intraday low tested the 20 DMA and bounced some right up there, closing right at the 10 EMA. So you can see that this particular market does pay very close attention to those levels. And if we get another, say on Monday, a close at or below the 20 DMA, I think that's just going to be another sign of weakness, and just before the market may want to sell off even further. US dollar on the weekly, we do get, looks like a inverted hammer candle here with a spike above and then retreat back to where it opened up the week. So that's bearish, and that does set a key top, a tradable top, at the high of 97.23. US dollar index for the EWO here, choppy and sideways, still very close to the zero line, not very helpful. The RSI, we came up, we tested the 60 level, small incursion above it, and now we're seeing this move to the downside. So it could be that that 60 level is going to hold as resistance, and we could start another fall to the downside here soon. And the MACD is open to the upside on the daily, and the weekly is open to the downside still. So mixed. So I think there's a good chance that the US dollar may have topped this week, and I think it's worthwhile taking a stab at it again on the short side for at least a couple hundred ticks, maybe much more. All right, let's take a look at the USD CAD, the US dollar versus Canadian dollar. We've got this move to the upside. If we zoom in here a little bit closer, you see that we started off here with looks like maybe a leading diagonal to the upside, correction. So we got 1, 2, 3, 4, 5, 6, 7 waves to the upside from that low here. So a 7-wave move is not a complete impulse. So I decided that it's more than likely that this was a correction here as part of this previous series. for a ninth wave, giving us a full impulsive count. So I do think that we've got a wave 1, a wave 2, 3, 4, and 5, or excuse me, back up, no. Wave 1, 2, which is a standout wave, 3, 4, and now I'm still anticipating a wave 5 to the upside. This correction here does look like it is a long drawn out um, flag, a bull flag, that may or may not have completed today. So we'll see what the market gives us. It doesn't, this is certainly not a, there's no good strong indication of a sharp turnaround here. So that's what I'm favoring at this time at that count, and we'll go into some greater detail here in a moment. The daily does close as a an outside reversal, but it's just not in the best placement at all. The QG3 here is in a bullish alignment to the upside, though we're closing underneath the 3 EMA for the first time in several days since the bullish alignment. So it's an indication that we're into a corrective period. And the weekly doesn't quite close as a inverted hammer candle there, and it does close above last week's high, so I would have to call that bullish, since that market did accomplish that. EWO here, we almost have a negative divergence between these two swing highs. The EWO does close basically right at the last swing high in the oscillator. USD, CAD, and the RSI, we don't have the negative divergence there in that oscillator. But if we zoom in here, with this recent move to the downside, we are very close to producing a negative divergence on the downside, which would likely set up a negative divergence on the top side if we get one more incremental high in the price, which is what I'm anticipating. We'll see here shortly. The MACD is open to the upside on the daily, and on the weekly we're still slightly open to the downside, with the signal line still underneath the baseline. All right, let's take a look at USD JPY. Okay, so we had this unexpected spike to the upside. It's still technically underneath this this trend line, but it's testing it a fourth time, so there is a chance of a rule of 4 breakout there. I'll go ahead and paint that for you. Hold on here. So as you can see, we've got 1, 2, 3, and now possibly a fourth test here, which suggests that there's an increased probability of a potential rule of 4 breakout to the upside. The QG3 was in a bearish alignment. Now it's contracted some. You see the price is finding some resistance a little bit right there at the 20 DMA, which is dropping. The week does close as a bullish hammer candle, setting a key low at 120.41, which is likely a reaction to this midterm trend line, which has held the price up for the last several months. So I think some bulls are taking a stab at the long side here, with most likely their stops are just underneath that trend line. So if the price was to reverse, knock out this bullish hammer candle on the weekly, it would likely hit those stops and create a strong sell-off. But we'll still have to wait and see if we get that or not. The RSI, we did break below the 40 level. You can see that previous sell-offs had hit the 40 level and bounced. So the 40 level had been a strong point of support in previous corrections, and we broke it here. However, upon breaking that, we bounced some right back into the 50 level, which is very neutral. And the weekly MACD is slightly open to the downside, and the daily is still well open to the downside. So that's bearish. So we'll go into the LE wave chart here in a minute and give you a couple ideas of what could be taking shape here. I don't know that we need to be panicking out based upon the weekly hammer candle, but we may reduce the position some, just out of respect for the hammer candle, which often does spur a reversal. All right, we'll take a quick look at the euro since it's closely related to USD. All right, so we've got this bounce up recently, a sloppy move to the downside and a recent bounce to the upside, but it's only 3 legs so far. It certainly could extend to the upside. That's certainly a possibility. I would say the key low in that market right now is obviously right here in the short-term low of about 991, 1.0991. We keep above that level. I think there's still a good chance that we'll continue to see an advance to the upside. Also, let me back out of here. Take a look at something. Let's go to the daily. No, that's not going to show me. Never mind. All right. QG3 is, or actually was, technically in a bearish alignment. Now the 3 EMA closes right at the 10 EMA, so basically hitting a neutral alignment there for the close. And the weekly does, not sure what to call that, because we had that gap down and reversal. It did close below last week. I guess you could call that an outside Q reversal. Technically, this would be basically a phantom red arrow or red candle, because it did close lower than the previous week's close, but it's painted blue here because it closed higher than where it opened. All right, it's an odd candle, but this week definitely closes outside and above last week's high. So I think you could technically call that an outside Q reversal, setting a kilo there at 0915. EWO, not very useful. RSI, we see a bounce. We're seeing a bounce off the 40. You can see previous hit of the 40 did produce a bounce, but was capped at the 60. And so again, we're bouncing off the 40 and may advance up to the 60, possibly break it. So we'll be watching for that. And the euro on the daily MACD is still open to the downside. That's bearish on the daily. And the weekly is open to the upside. So I would say the euro has a pretty good chance of a turnaround here, though we only have 3 legs up so far. If the market comes back a little bit, maybe gives us a lower risk opportunity to enter, that might be worthwhile, or give us some other indication a little bit higher, that this uptrend is here to stay and may extend. We'll be watching for that as well. Okay, let's move on. I'm going to bypass the Aussie and the Great British Pound because there's really nothing to see there right now. We'll move on to the Dow. All right, so the Dow here, I think, may be working on a subwave 2 to the upside. If we zoom in here a bit, let's go to the daily. Yesterday we had the inverted hammer candle, and today we basically exceeded, almost closing above it. So that may give us some momentum to the upside into early next week, maybe to fill in this manic move to the downside. You can see that the market's come down here and basically been chopping back and forth across the 200 DMA. Basically, I think this is a huge bull bear fight right at that level. Um, and there's no clear winner just yet, but I am starting to favor the downside here. The 200 DMA, its upside advance is starting to fade a bit, and the 50 DMA, which is the orange line, has curled back over and is starting to head down to the 200 DMA. And of course, if that 50 does drop below the 200, that could spook the market with a death cross. Whenever you see that happen, um, it is an indication that the market could be putting in a major top. It's happened plenty times in the past. The week, however, as you can see, closes as a bullish hammer candle. And that's another indication that we could advance up a little, at least a little bit higher going into next week. The Dow, EWO, not very useful there. The RSI, you can see we've broken below that 40 level a couple times now, but no capitulation just yet to towards the 30 level, which is considerably lower. And the MACD is open to the downside on the daily, and on the weekly, open to the downside as well. That's also bearish. So, somewhat of a mixed picture. I would say that we could get a bounce up early next week to fill in, the janitorial staff coming up here, fixing this gap to the downside, and clean that up a bit, and then maybe get a reversal. The 50 DMA is also going to be a key level resistance. We'll see if the market respects it or not as a source of resistance. Okay, let's move on to crude. All right. Crude oil here is shot down here a lot deeper than I expected, but it seems to be giving us a small bounce just above the 61.8% Fibo, right there at about 49.90. I think this market could give one more shot to the downside, maybe test that 61.8% Fibo, set up a possible positive divergence on some oscillators, and give us a turnaround, possibly next week. If we look at the Bollinger Bands and the 3 EMA, you can see that the 3 EMA closed below the lower Bollinger Bands once and twice. The third closed right at the Bollinger Band, and now we've pulled back inside. And so, again, this is a time and time again, I've demonstrated how when that 3 EMA is closing underneath the Bollinger Band or above the Bollinger Band is a sign of an overheated condition, and the market often picks a time to cool off shortly thereafter, and I think that's what we're seeing here. The pull into the Bollinger Band space again. So I think we might get one more spike down to test that 61.8% Fibo right around the $50 range, and then maybe a possible reversal. The weekly does close certainly lower. That's looking bearish. And the EWO here, really nothing very useful there. that I can see. The RSI, we do get a bounce up here. May give us a little, it'd be nicer if we had a little bit more room, but if we get just a very minor incremental low to right around that $50 range, then we could possibly set up a positive divergence there in the RSI, especially if it's just a quick jab down and right back up. And on the MACD, still open to the downside on the daily, and on the weekly, we're still open to the upside, though closed in just a bit. So overall picture for crude oil, I think we could still see some downside, though it may be limited. You might find some support right around that $50 range, the 61.8% FIBO. All right, so let's take a look at the LE wave charts. Here's the US dollar. It does look like this may be a false breakout to the upside. We did come back and make an incursion below the trend line again and popped up a little bit, but it's deep enough to make me think that we could break it formally next week. The orange trend line, which was the short-term trend line support, is certainly broken, and so I'm thinking that we could be in a starting off a bearish move to the downside as long as we're below that 96.75 level. Which, if we look at it a little closer here, oh, we can't do it on this chart. Here, let's go back here real quick. We'll go here to the hour. So this does look like to me this could be an initial impulse down, a wave one, a wave two. This could be another wave one to the upside or downside, and then we're working on another subwave two possibly. But the key level of resistance is right there at this three-legged move to the upside, the top of that correction, which is 96.75. So if we're below that, I think we're in good shape for a continued selling. And if that's true, if we've completed wave 2 blue here is a subwave 2 of black 3, which is yet to come, the next move to the downside could be very strong. Yeah, especially if we break below that purple trend line. It could just all out capitulate. USD, JPY. Again, here's what we've got. We got this move to the downside. We bounced off that trend line like I showed you earlier, and we're getting bulls excited again. But this blue trend line has been tested once, twice, 3 times now, very close to a 4th time here. It's going to be a key level of resistance. We break above that, and we invite another short squeeze higher, possibly. You know, my hats off to the Bank of Japan. Good job pulling your currency, or not out of the fire. Actually, it's you're just weakening it further, but you're getting your way with your own currency, is what I'm trying to get at. But the LE wave count suggests that since this move to the downside looks like 3 waves, A, B, C move. This could be a extended wave B to the downside. That's certainly possible. And now we're working on a wave C to the upside as part of maybe a running flat of subwave 2. So, though we did get the hammer candle on the weekly, we'll back out of the position some, but hold on to at least a couple trenches so that if this is just kind of a fake out, that stalls out right there at that trend line and shows us a nice reversal, then it'll be good to continue to be short. And if that happens, then we'll add to the short position. However, if we get a solid close above that blue trend line, we might have to back out of the position altogether. And if we get a good solid impulse higher, maybe up to 123.70 or even higher, then that might give us a reason to look to the long side on a three-wave pullback. I have no problems with getting to the long side in this market as well. All right, so let's move on to USD, the Canadian dollar versus the US dollar. Again, here's the other wave count, expecting that fifth wave move to the upside, that if this midterm count is correct, and we are going to form a double top of some kind here, we want to see that price keep underneath. Very critical resistance right there at 23.30, or 28.33. A break above that, and this count is busted, and we have to reformulate our accounting. Natural gas. I do think we finished wave D, and now working on wave E to the upside. But also present is a potential rule of four breakout. You got this blue line that's been tested once, twice, three, and now possibly a fourth time coming up. So I'm going to give it more time, but if this leg up pierces that blue trend line and challenges wave B in one solid impulse, I'm going to say this pattern may be busted, and we may actually be starting a rule of four breakout, which means a three wave move to the downside may be a good spot to looking to get long. So we'll see what kind of attitude this market gives us in the next few days. All right, 10-year note. We've got a wave one to the downside, wave two, sub one, and we're working on sub two with an A, B, C, but running flat, it looks like, possibly. We've got the final leg up, wave C. I'm expecting to work itself out as 5 waves up, with wave 1, 2, 3, 4, and 5. Wave 4 still in process, and it needs to turn around very soon. It cannot move below wave 2 there, and that wave 2 low is at 125.05, 530 seconds. We break below wave 2, then we're not going to get our fifth wave. We may be starting our sell-off sooner than later. All right, here's our market breadth indicator, and this brown trend line, brown moving average actually, is a 52-week average, and it's been sliding towards the downside, towards the zero line. It's currently at where is it at here? It's that brown line is at 40.96, so creeping ever closer to the zero line. Our break of the zero line has been shown to in past to indicate the start of a major bear market in stocks. So and we definitely have a very large negative divergence that's been built up over the last several months, actually going back into early 2014. The market's been advancing higher, but it's been carrying fewer and fewer number of stocks to the upside. This particular indicator, the blue, is the number of new 52-week highs versus new 52-week lows. As you can see, with a declining trend in that blue trend line, you're seeing more and more stocks with new 52-week lows compared to new 52-week highs. So overall breadth of the market is bearish, with more and more stocks developing new 52-week lows. Here's the Dow and the larger count ABC flat, and now wave 1, wave 2 running flat, wave 3 looks like it could be finishing here, and which would, if this count is correct, allow for a wave 4 sharp correction. I think it could come back as much as 20%, but that's probably just going to stir the Fed to come out with another easing program of some kind, and we could see with QE, what are we on, 4 or 5 now? I've lost track. The next quantitative easing or easing program of some kind, we may create a fifth wave spike up after that. So, is there a greater bearish count here? Possibly. This is the most bullish that I can come up with scenario. There's certainly could be far more bearish, but we're going to need to see an impulsive drive all the way back down to the end of wave 2 there, say at 10,445. You see that take place, then this bullish count is busted, and I would say the market has completed a very major top, and you're going to see probably the next year or two of stocks just tumbling big time if that was to take place. All right, so here's the Dow. You can see it's struggling with the 20 DMA currently. Also, on the log scale, we've got this long-term trend line that started all the way back here in the 2011 low, was tested once here in 2014, and now it's being tested again. And frankly, compared to the last test, which created this very strong bounce, this test is not creating a bounce. It's the price action is very lethargic in and around that trend line. So it's definitely being pressured. Is it going to break? We don't know. We have to wait and see. But if, say, next week we get a weekly close underneath that trend line, I think it's going to be good and ready for a strong move to the downside. Weekly chart here. Take a look at it. This week hasn't closed out yet, but it definitely closed higher. So, but if next week we come down and close underneath that blue trend line, I think the wheels are coming off the market, and it's going to sell off pretty substantially. All right, let's move into a closer look using YM, which is a mini Dow contract. Futures contract, and it looks to me as though we've got wave 1 complete, ABC up for wave 2, and then a 1, 2, 3, 4, 5 complete for a sub 1, and now we're working on sub wave 2 here. And it looks to me as though we got a wave A, and then we've got a contracted triangle for wave B here that's developed with an A, B, C, D, and E finished, and now one more poke to the upside and for wave C of 2. I think it's going to give at least a minimal gap fill here, but I would like to see it stay underneath the gap high, and the gap high is at 17,848. So look for wave C to end somewhere in that gap range, and then look for a reversal. At this point in time, I would say, since wave B does look like it is completed, key support is going to move up to the end of wave B. And that's going to be right there at 17,426. So break below that, I think that's going to be an indication that this correction is over with, and we're going to start our wave 3 of 3, black 3 of green bracketed 3 to the downside. Okay, so that concludes my coverage of the peripheral markets for this week. I hope you all have a great weekend, and we'll be talking to you later. Adios.